Surprise, surprise. Down here in the Motor City for today's show. Intel ruins the earnings party, dragging down a few other chip stocks. We got some other earnings to talk about today as well. Big data, PCE data 8:30, jobs data 8:30. Will that change how the Fed thinks? 8:35. We're going to bring our buddy Tim Quast back on, talk about some market structure. It's Friday. It's pre-market prep in the Motor City.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Okay, folks, we're starting out in the red, but not nearly as red as we were before. We had a big dip off the Intel numbers. S&P's only down a couple handles here at 49.20.5. The big number on the upside is that high from Wednesday, 49.33.25. The dollar index down 28 cents at 103.09. Bonds up just a few ticks, just under 120. Crude taking a breather after a nice rally this week, down 70 cents. Gold market, that's up 450 at 2022.30. Don't have my Bitcoin here, but let me throw my Bitcoin up here and see what Bitcoin futures
back above 40,000, Joel.
Yeah, yep.
Back above 40,000, just barely here.
Are we building some support?
I don't know. We'll see. We'll see. I mean, you had Kramer come in saying that it was going lower, so that might have encouraged some buyers coming in. They like to do the opposite of whatever he says.
Okay, let's bring in Triple D here. Is not in the studio with us today, but Triple D, how are you doing on this Friday? Are you 100% yet?
No, definitely not 100%. Longest flu bug ever. I've got the cough going, but I'm okay. I'm on the road to recovery. Get a little bit better every day. Maybe 30 years from now, I'll be feeling just fine. So okay. This day is going to have a lot of information coming at us. Let's just sum up. PCE is very important here. Inflation data coming. We got earnings from Intel, which we're going to go over here in a second. That is knocking down the entire chip sector. And naturally, what it does is it causes rotation. We're not in this market where they just sell off everything anymore. They're always buying something off so the indexes don't have to go down. So that's what we're going to talk about here today. We could jump in. You want us to jump right into the big gun here, AB, Intel, give those numbers because this is the driver here for everything so far this morning.
Yeah, like you mentioned, I mean, you have Intel reporting. The numbers were not as good as expected. Let me go ahead and get those pulled up. But you're seeing the price action in the stock now down 10%. You typically, do not see Intel move that much. Let's go ahead.
Move.
I mean, for Intel the other chip stocks, you expect them to move this much. So EPS came in at non-GAAP EPS came in at 13 cents versus the 33-cent estimate. 12 billion versus a 12 billion to 13 billion versus a $14 billion estimate. And this comes, we talk about this all the time. It's almost less about the numbers and more about the expectations going into it. And because you had seen every other chip company out there, whether you're talking about NVIDIA, AMD, SMCI, IBM, just absolutely blow it out of the water. The bar was raised higher for Intel. So for them to come in with not a great quarter, you're really seeing them get shellacked and punished for it in today's trading.
Yeah, huge move here. We did get into the 43 handle. 43.10 is your pre-market low. You're $1.60 off that level right now at 44.71. I think things maybe thicken up a little bit on the downside here because if you had the 50, the 49, 48, 47, 46, 45 puts here, you're looking at a pretty nice windfall on that. I've owned this thing for a while, and boy, oh boy, 50 was a great number Looking back on the dailies, that also coincided with the monthlies. Obviously, that's not going to come in to play today. The bottom of yesterday's range is way up at 48.97. So, just not a quick recovery. Some like yesterday, Dennis, we talked about the Tesla. And you're like, well, maybe this is a buy the dip opportunity, but let it breathe. And holy mackerel, that's what happened at Intel. What is this doing to the other chip stocks here? Because you had talked about rotation within the sector. Nvidia, what? Oh, Nvidia down 383. Whoopee, right, Dennis?
Yeah, and I hope your volume's working because maybe it's on my end. You guys are fading in and out on the volume, both of you here. Chat, if that's happening for you guys, let us know and they can try to fix it. It might just be on my end because nobody's complaining about it in the chat. I mean, you see what's happening in the chips. They are all down here. And it's not only just, Intel. We got KLAC's down 33 bucks here too on their earnings report. Maybe you could quickly give us the numbers for this one too because we got the double whammy in the chips.
KLAC, yeah, let's get those numbers up real quick. And I think Dennis, we just need to might be a little bit closer to these to the mics.
Most people in the chat that it's good, so as long as it's good, cool. But people are hearing some fading, so okay, let's go.
You said ticker KLAC?
Yeah, KLA 10 core, yeah.
Oh, okay, so these came out, yesterday after the close. Let's see, EPS $6.16 beats the $5.91 estimate. Sales beat as well. Let's see, trading lower after. Okay, so the company issued guidance, and I assume the guidance was not as good, so falls on downbeat guidance despite earnings beat because they had a double beat. So anytime the company beats on on sales and EPS and the stock's trading down, it's typically because something they said in the outlook was great. So I haven't gone into that yet, so I don't know exactly what they said about guidance, but either way, the numbers just looking at it don't look bad at all. The double beat, but then they issued some sort of guidance that is causing this to sell off. Just going back to Intel real quick. I mean, Jay Rice said in the chat, a 2 standard deviation move for Intel. That's why, I mean, for if there's anyone in the chat that's a newer trader and they see, oh, Intel, it's a tech company down 10%, that's pretty standard. Well, not for Intel. Intel is kind of one of these more older, slower moving companies. A 3, 4, 5% move on Intel, that's usually a pretty big move for it. So to see it down 10%, I mean, with that said, let's have some context. Pull up the daily and back out for a second. This thing has gone from about $25 up to $45 in the span of
50,
8 months. So you do have, I mean, even though with this 10% drop, you're still, if you got into Intel at any point basically in the past year, you're probably still on the green on this. But you can just see here how out of favor this was for a while. Came all the way back, doubled in price. Now, of course, selling off a little bit. But let's go back to KLAC.
Yeah, KLAC is $40 off its pre-market low. But what we've been discussing, and we'll just go to the old microchip. I mean, what we've seen in the short term here is these stocks have been bought on dips, whether that would be consistent, today, whether people, I mean, there's some shorts out here in the market. There's not always like a ton of shorts, but once again, you have a windfall down to 580 or now it's 620. When I see that on a pre-market chart, I'm like, maybe I missed my chance to buy this at 590 or 585. So that's been the current trend with chip stocks and earnings. We'll see if that plays out. Same scenario today.
So Richard in the chat is saying ring the cash register on chips and tech. So you might think, oh, Intel missed earnings, tech's been super hot, all tech is selling off, but that's not really what we're seeing this morning, Dennis, isn't it? It's not all tech selling off this morning. It's specifically just the chip stocks. Is that correct?
Yeah, and this is what we continue to see in this bull market is that the rotation just keeps the indexes from going down. And Intel, and obviously a lot of chip stocks, Applied Materials, Qualcomm, NVIDIA, AMD, all down basically off Intel and KLAC. But it's crazy to think that, Amazon's going to rally on this and Netflix is going to rally on this and Tesla's bouncing back on this because, Apple's up on this. It's just this market where people just want to own stocks. And if they're going to sell something, they're not going to cash. They're putting it right to work in something else. We're also seeing the airlines have another good day. Great day yesterday. American Airlines had good earnings, still along my AAL. That catches multiple upgrades here today. Stock is trading higher again, just bouncing through sectors as quickly here for you. The banks are showing some strength. The utilities are showing some strength. The home builders are showing some strength. Again, a lot of this might change in 18 minutes because we get that PCE data, and that could poo-poo the whole market. If we start to see, inflation tick higher here, that's going to change everything. But right now, with the information we currently have, rotation just keeps this bull market running.
Just want to talk about that AAL real quickly in reference to our conversation with CC. I believe that was yesterday. Uh, when you're playing the options, when you're going out, your time frames, going with the weeklies, you miss the opportunity. I mean, if you held on till Friday, right? It's still Friday, something like this. But there, Dennis, you talked about being able to capitalize on the gap and go situation. That's
Yeah.
exactly what you had here in AAL. You had the update after earnings, the strong follow through yesterday, and kind of a mixed bag of a market. So AAL, let's see if I can find anything on the dailies here or the monthlies.
Yeah, while you're grabbing those, I'll go through the numbers real quick. So EPS came in at 29 cents a share versus 21-cent estimates. Revenue in line, right above 13 billion. But then the CFO and some of the executives kind of gave some, said they expect it to continue to be strong for airline bookings. They're still seeing, last year was pretty strong, and they're seeing their numbers in line, if not better than with last year. But airlines overall, to me, you guys have been in the market for longer than I have. To me, they just seem like companies that overall, kind of like car companies, like they don't grow, like they don't have like great margins, I guess, or don't grow as much. Because you're looking at the chart on American Airlines. While the market was making new all-time highs right here where my cursor is in February 2020, this thing had been down from its highs by 20-30 bucks. Why don't these companies, I guess, go up over time like the overall market does? Are they better for just kind of trading these swings up and down?
Well, this is a fantastic question. Again, American Airlines reported yesterday morning, so we're just going over it because of the double upgrade here today. But what's it going to take? Like, if these airlines are having close to record earnings, in some cases like Delta, they were having record earnings. Why are the stocks not at record highs? You got to ask yourself that question. Is it telling us that they're still scared that the consumer is eventually going to cut spending back? Is it telling us other things? Is it telling us they just don't care about airlines, that we only care about tech? A little bit of the latter, probably, that this market has just been driven by tech for a decade here, and non-tech stocks have been left in the dust. You're sitting there invested, and people are always going to give me an example. Oh, this one's non-tech and it's went. But overall, the average tech stock has been outperforming the average, non-tech stock for the better part of the last 20 years. Really, since, the financial crisis, say 15 years, we've kind of been straight up in tech. And I think people just continue to just not care. There's not a hot story. There's not an AI story with American Airlines. There's not a lot of story. I think there's value here in these companies. The earnings performance has been fantastic for a lot of them, but I think they just get forgotten. And if you're not tech, investors really aren't that interested. Like, you think about new ETFs here too, and how much ETF is the driver, AB. Like, ETFs. Oh, I'm going to launch, the new, airline ETF. Well, we have jets. How many other ETFs are out there that are just airlines? We see new tech ETFs every single day. Like, it seems like that's this one tech, this
Right.
one tech, this one tech. That drives money. That drives funds to have to buy these stocks. That's your real driver. It's the ETFs are the driver of everything here now, and they're just not sexy. So, what's it going to take to make them sexy again? That's really the question with the airlines. I do own some AAL. I think there's value here, but the value trade has just not been great, really, for the past decade. It's been all about growth.
Even pre-COVID, if you look at this stock peaking way back in 2018, 2019, it's 60 bucks. And, other factors, obviously COVID made a whole new reset for airlines and in travel and cruise lines and everything. So you had your opportunities, but you look at just on a relative basis, even pre-COVID, these stocks were not your performers, right? They had peaked. And tell me where the AI is in airlines, right? I
It
mean,
isn't.
there's absolutely
And that Joel, that's actually one of the things that I like to look at is right before the COVID crash, where was the stock trading at? Because the market was making all-time highs. And if you weren't making all-time highs or even close to it, like American Airlines wasn't in February 2020,
No.
then that shows me that the market wasn't that, you weren't in favor then. Why should you be in favor now? Has your story changed a lot since COVID? Not really for the airlines. I mean, travel's up now from where it was during COVID, but basically right back at where it was pre-COVID. So, I think the move is with these things is I'm just going to watch them. And when they get a little bit too low, like you said, Dennis, there's still value in them. And the government's not going to let any of these companies go out of business like what we saw during COVID when they needed help.
Maybe they're going to let Spirit go out of business.
Yeah, well, okay. I'm not trading Spirit I'm no Davy day trader trading Spirit over here. Anyway, I think I'd be sticking to my, Deltas, my American Airlines or United. But I mean, I get anyone who bought Spirit on that, the day it was down 40% has been rewarded from
Well,
there.
not
But
really, AB. If you bought on the first day that it was down 40%,
then it
you
went
were not
further down.
rewarded.
Yeah, 'cause
You
it
need
went
to be buying it on like the third day because we fell from $15 to 6 and then to 4. So we just overshot because, one, the airline, everybody's like, oh, it's going bankrupt. Well, you know what? It's not imminent going bankrupt. And maybe the deal comes back on the table. If you think you're an antitrust, like you're a regulator here looking at this, and you kill the deal and the stock goes bankrupt, 5 days later here, it's like, ooh, maybe we got to watch what we're doing a little closer. Don't think regulators start looking at those charts and saying, oh crap, maybe we screwed up here. So I would say this deal is not dead. This deal still has the potential to come on the table. The problem is if the deal does officially die death, can Spirit Air survive on its own? I'm not sure. So, I mean, it's a lottery ticket at this point in time, a $7 call option, if you will. Deal goes through, maybe you pop back up there to where you were. Deal doesn't go through, you could be, in trouble on the stock.
Yeah, and what I was gonna say is just, basically when they get a little bit too low, and you can look when I pull up the Jets ETF, you can see at certain points, get a refresh here. At certain points, the airlines have just gotten so beaten down that they've provided some value for nice little swing trade. But I wouldn't want to just buy and hold these stocks based on what we talked about, the fact that, hey, the market has clearly said we like other things more. We'll stick to our tech stocks or this and that, and not necessarily the airlines. But here, let's move on here. We did have some other companies report in the credit card space. I don't
Mixed
know.
bag there. Mixed bag.
Let's pull up
Yeah.
Visa first. Visa trading lower today. Go ahead and pull the
Yep, down $7 here.
It was also at all-time highs going into the report. And it's always tough for stocks trading at new all-time highs. We talk about this to continue to go higher. A lot of high expectations here, but give us those numbers and then we can analyze.
Yep. So EPS came in at $2.41, beat estimates of $2.34. So slight EPS beat. Sales also came in just ever so slightly higher at 8.6 billion versus 8.54 billion. So the numbers look fine. A slight double beat, but it's like you said, Dennis. I mean, the bar was set high for this coming in. I mean, people know that credit card debt is at all-time highs. People have been spending their credit cards. So maybe people were expecting a little bit of a better report. The payment volume number from Visa actually was a miss, but the expense guidance increased. So either way, not a terrible report by any means for Visa. And you're not seeing the stock getting absolutely punished this morning, but just a slight pullback, maybe a healthy pullback around 2%.
This stock's story is healthy pullbacks. Visa and MasterCard, every time they have a healthy pullback, they have been a buy basically since birth. Like MasterCard, when did MasterCard start trading publicly? Back like 2007. I'm going back all the way. I'm trying to remember. Going back.
Tough time to IPO in 2007.
2007, I guessed right. I mean, this stock, and again, I had this in my long-term portfolio forever. I finally got rid of it back, slightly after the COVID crisis there. Just thought it was fully valued at 29 times earnings. Now it's 38 times earnings. So it's continued to just go. Visa, same story. I mean, both these stocks have just been unbelievable long-term performers. 2008, IPO, basically down, at like $15. It's $270 now. P's 31. Are they fully valued? They've been fully valued for a while, but they just slowly continue to bring up earnings a little bit, and the valuation stretched even further, and that's why these stocks are at all-time highs. But they've been unbelievable companies.
Same thing here that you have in the chip stocks. You had to dip down to $261 area. Now you're $4.50 above that at 266 or 265.55. Looking at the dailies here, once again, when you see that big of a pop off the pre-market low, you got to be thinking, man, did I get an opportunity? Did I miss an opportunity here? Obviously, Tesla, you took out the pre-market low and it was time to go. But I'm looking at this 262 and a half area. That's $3 away. So if you feel you're not going to get a look at the pre-market low, you can identify that area, 2 or 3 lows, right at the 262 and a half area. If you're a gap fill trader, and how many times do we see to fill the gap? How about the gap fill that you had? Was it Humana yesterday that gave you the bad news? It popped, filled the gap from the bad news, and they came out and they really gave you the bad news.
Yeah.
And it got hammered again. Maybe show the daily on that one. So the bottom of yesterday's range, you made a new all-time high yesterday at 272.78. Your all-time high mark was right there at 272.61. But if you're looking for a gap fill, 270.80, 271, those are the areas of your last 2 daily lows.
Yeah, we know the volume. There is something going on with Joel's mic and AB's mic. It's just coming in and out. So we're just going to have to tough it out here because I don't know if we're going to be able to solve it here today. But your volume went very low here. So something happening on that desk with that. Maybe you can look in the background, AB, and just see if you can fix anything. Keep moving on here. I mean, Visa, we had American Express also report.
Right.
American Express, similar, stock trading near all-time highs coming into the report, and they're continuing to go higher. What's the numbers look like on this one, AB?
All right, so for American Express, they reported this morning EPS came in at 262, missed by a cent. The street was looking for 263. Revenue came in at 15.8 billion, missed by 150 million. So I don't know. The report seems a little bit, in line basically with expectations. No real big miss, but they raised their dividend by 16% to 70 cents. So that might explain why you see some buyers coming in this morning and propping the stock up despite a slight miss. Also some strong guidance coming in. So the guidance, the dividend raise is enough to usually make up for, again, if your numbers come in, even though they were a little bit below expectations, they were still in line essentially. So decent report for American Express. You're seeing the stock trading up a little bit more than 2% this morning. Let's go to our 30-minute chart.
You know what I wonder too is if Discover and COF didn't set the bar a little bit lower for American Express. They had kind of a high bar because the stocks were running up. But we know Discover's report was not great, but the dip did get bought there as well. COF's report last night was getting hit a little bit, but the dip's kind of getting bought there. So you kind of come in, and the comps, we don't compare Visa and MasterCard to American Express. And you're like, why? Credit card companies. Because they're structured differently. Visa, MasterCard, primarily just transaction processors. American Express holds some of this risk on their books. So, they're not just, giving it out. So, I mean, they're structured differently. So when I'm pair trading, Visa, MasterCard go together, COF, American Express, DFS go together because they're structured similarly. So just keep that in mind. I do think the bar was set a little bit lower from Discover for both COF and American Express. But again, you look, and the dip getting bought there too. We've been talking about tech stocks getting bought on dip. Well, this is a non-tech stock, and it got bought on the dip too here. So maybe they're just hungry to buy dips here.
Big old range there. I'm not even going to look at the lower end of the range there, but I will talk about that pop that you just got up to 194.80, and that is a really good level. 194.77. That was your March of 2022 high, so you got some nice confluence there. You're $2 away from that. Once again, you backed off. Look for that area. The all-time high in that's a little bit closer to 200, but keep it close. I'd even be looking if you're looking to peel out of something here, see what happens at the 194, 195 area for AXP.
People are nervous ahead of the number. We're starting to sell off. We just lost about 5 handles on the S&P. I'm kind of nervous here too, because if inflation, like there's some numbers that are gray where, oh, GDP is hot. Well, okay. Well, that means soft landing. Inflation comes in hot. This is a black and white number. Inflation comes in hot. That is not good for any stocks. Inflation comes in not hot. Obviously good. I wouldn't be surprised if we tick a little bit higher. Can we preview this number here, Aaron? Give us the expectations here, because we're 2 minutes away from some big market moving information.
And the jobs number, Dennis, as well.
So for the core PCE is supposed to come in at 0.2%, 0.2%. That is against, it was 0.1% the week before. Core PCE year over year is supposed to come in at 3%, which that's important because the year over year forecast of the previous month was 3.2%. So it's actually supposed to come down the core PCE by about 0.2%. And then let's see. I don't see, so I'm not getting any estimates for any jobs data, but so the PCE again is expected to come down ever so slightly year over year. So anytime the bar is again set for the inflation to fall, I feel like it has to show that. If it shows that it stays flat when it's expected to fall, the market may not like that very much. So let's see if someone in the chat gets us any of the.
Well, remember we had a mixed bag with the numbers yesterday, correct? You had the good GDP number, and then the jobs growth was falling off a little bit, so you could get the mixed bag here. I think really the primary focus here is still on inflation as opposed to the unemployment. The employment situation. I think that's what the Fed has said they're concerned about. I mean, if you talk to Mr. Powell, it's like, hey, we have nothing to worry about. The economy is still strong, and inflation, we're not at our target yet, but we're coming towards it. So we had a mixed bag in the numbers yesterday. Let's see what the market delivers today. Your pre-market high, you're just off that at 22.50. That's just right near your old-time closing high at 23.25. Just above that, you have the high of the move at 33.25. If they start to whack this thing here, first things first, we'll be looking at mid-range on the session. That comes in at 49.12. That's a real light number. But you got to look at that pre-market low, 48.98.50. They sure had an appetite for buying under 4,900 yesterday. So nice move here. We are coming up on the numbers.
Yep, it is 8:30 now. We should have this coming in. Okay, let's see. Personal spending came in 0.7% versus 0.4%. Oh, core PCE, it's cool. It's cool. 2.9% versus 3% estimate. So came in lighter than expected. Your core PCE, US core PCE came in at 0.2 versus 0.2 expectations. So that came in line. PCE price index year over year, 2.6% versus 2.6%. So everything pretty much in line. You do see the core PCE year over year down a little bit, 0.1% more than expected. So let's see how the market is reacting.
Battle of the bulls and the bears here.
Yeah, you can
sure.
see this leg up. You can see it popped up real quick up above our pre-market highs, but then is now giving that back. So maybe
well, you got a couple highs to lean on here. If you have a penchant for shorting the market, you do have two daily highs. I don't want to mention that word, but you have the high from yesterday at 26. You came up shy there. It feels like you have a few sellers on the pops, but it's just we're not tanking here. We're basically in the same place. Inline numbers, Aaron, and the market was trading right around here, 49.18, right before the numbers. So
yeah, I mean, I think either way, if you're, I think probably what it is that typically, if the market would have rallied off of this a month or two ago, we've already seen the rally. Part of it's already priced in. People have been expecting inflation, to be lower. So you're not seeing really the bulls take charge here. You're seeing the market come down a little bit.
Even the bonds are not moving here. Downs, the bonds were up a few ticks. Now they're down a few ticks. Looks like sellers are starting to congregate here, protecting that 49.24 area. But I mean, Well, are we going down? Inline numbers, or we're getting some inline price action here is what
Yeah,
I'm
it's in
seeing.
line here and it's very quiet. TLT slightly again, chat is all over it. That's what we watch is the TLT because it's the lie detector test. We've slowly leaked. We're down about 30 cents. Not significant, but a slow little leak because we were flat coming into the number here. So we have a little bit of pressure here. Keep an eye on that. That will move your IWM. If TLT continues to sell off, I'd expect the markets to continue to go red. But if TLT can bounce back, that's going to lead your IWM. So if you're trading all of your IWM components, all your small caps and stuff, keep an eye on the TLT.
I'm seeing some people in the chat talk about the validity of the numbers, and look, make of it what you will. It's all we've got, and it's what traders go off of. So whether you think they're legit, whether they're not, it's all we got. I think it's funny too. We had Peter Schiff on one time, like the day before CPI, and this was actually right before CPI like skyrocketed. And he was like, "Oh, inflation's way higher than they say. You got to buy gold, got to buy gold." And then we were talking about CPI, and I was like, "Well, CPI hasn't shown inflation's gone up." And he's like, "Those numbers are all fake. You can't look at those numbers." And then CPI goes up, and he's like, "Look at the CPI. See, inflation's higher. I told you." And I'm like, "Wait a second. I thought you said this number was fake." So when it's what you want, they're real. When it's what you don't want, they're not real. So again,
the number's fake. There's no doubt. But like you said, you've said it perfectly, AB. It's all we got.
Right.
We go with the fake numbers.
I mean,
we know they cook. The numbers are all cooked because there's multiple papers out there. We've got Gil Morales, Peter Schiff. If they calculate CPI the way they do, the way they did 30 years ago, the way they do today, inflation would be 6 or 7 points higher. So when they say it's 3%, it's really like 8 or 9%. It's always been that way. But when we were cooking 9%, it's really like 16 or 17 those years. So that's the truth. But we only go with the fake numbers. That is what we have. 2.9 versus 3 is slightly light. It's not going to derail the bull, I don't think, here.
Yeah.
But again, the markets are going, a little bit weaker. TLT has leaked. IWM has leaked back the gains. So there's a few nervous people out here. We'll say that.
Yeah, just before we go to our guest here, real quick, I just want to talk about yesterday, and it was a day for the Bears, like to make it stand, right? You had one of the Magnificent Seven, if it's in there or not in there anyhow, based on whatever metrics you use, but they rallied the market. I mean, they rallied the market off the GDP number, and it was overall it was a win for the Bulls. 6-day winning streak, right? 6 could always be 7 here, but right now you're feeling a little bit nervousness here in the market. As always, taking out the pre-market high. I don't think I'll be chasing it if we do, because we have the 2 other daily highs up there. So it feels a little bit tight, but also you have the propensity of the market to, close on its highs for the week.
And anytime you get a little extended or overextended, you might see some, just because if you see, the market pull back a little bit, that doesn't mean it's necessarily time to ring the alarm bells. But we were talking about credit cards before the data came in. Joel, where do you guys think these people are spending these credit cards? I mean, I've got an idea based on some earnings that came out.
I think Dennis bought some new Louis Vuitton stuff. Did you?
Yeah.
Some Gucci, some Louis. So I'm not gonna be able to pull up in Benzinga Pro because we don't have OTC. But let me give you the numbers here real quick. Louis Vuitton, which of course trades on the OTC markets because it is international. 14% annual growth, and the stock is trading up more than 11%. Reported sales of $93 billion, exceeding consensus forecast. Again, more than 10% year-over-year growth in its revenue. Some other retail stocks. I mean, we could probably find some luxury ones. I was looking at Canada Goose here in the United States, trading slightly higher, but Levi's also reported. Not a great report for Levi's. Let me get you the numbers on that. Do you guys have any other ideas of luxury stocks we can look at?
Luxury
in the United States.
Luxuries. I just want to say, Dennis, the famous saying from Deion Sanders, right? When he was talking to the Colorado players, when he first got there, he got introduced. He was like, "I'm coming to town. I'm packing my bags, and they're Louis Vuitton." So I think about that statement. We're continuing to fade here a little bit. Down a little bit of a leak. Can I say the high the day's in, Dennis? Is it okay for me to say that or
No,
not? No?
definitely not okay to say that. This market
Okay.
is wild. We know that everything can change in a hurry here. So I think what we're going to see is continued chop here. Let's bring Tim Quast on here. We haven't heard from Tim for a long time, so the chat's very excited to hear from Tim. I'm very excited to hear from Tim. I'm trying to get a feel. I mean, this market has been hot for a bit. Is it a cooling period we're going into, or is this just another dip that gets bought?
Tim looks like he's a little scared of the market and he's trying to stay safe. Let's go ahead and bring Tim on. Hi, Mr. Timmy Quast, CEO and founder of Market Structure Edge, out in his
Oh my gosh.
chalet out in Colorado.
Hey, you never know when you're going to need a helmet.
Yeah.
So not only do I have the mountain man look, because I'm here in Steamboat, and I haven't bathed, so apologies, guys. I'm heading
I
out.
thought I smelled something.
I'm heading out skiing as soon as it gets light after an engineering meeting. But yeah, Dennis, maybe we need helmets. I don't know.
For the market
Good to
right
see
now,
you
you
guys.
think
I
so?
kind
Yeah,
of feel
but
like I need a helmet with this one. We're chopping around here.
I've missed you guys. Good to see you.
Yeah,
We
good
missed
to
you
see
too, Tim.
Good to see you as well, Tim. So let's start. I mean, like you said, so we're at, basically all-time highs in the market.
Yep.
Usually sentiment follows price. And we've talked about this a lot, Tim, that as the market goes up, people get more bullish. Yesterday, interestingly enough, I saw in Stock Twits, 90% of the posts about SPY were bearish, which you typically don't see that when the market's making all-time highs. You're not seeing kind of this euphoric type of, oh my God, the market's going up, we're so bullish, everyone buy, like we saw in 2021.
Agreed. Yeah.
Why do you think that is?
Well, so one of the things that we talk about a lot is context. We say from the way we think about the market, which is market structure, the rules and mechanics of the stock market and its cadence and calendar. That the market isn't new every day. We're not starting at go. Every day is a new day on the market. There is a continuum that people should know about. These are the things that we talk about, and around options expirations, it's very important to us to see what happens in derivatives, because derivatives can be the tail wagging the dog. And I'll show you what I mean, if I may. So, picture's worth 1,000 words. So let me just show you the two things that we look at. And internally, we had this discussion and we said, well, there's our answer. If you use the old Sherlock Holmes adage, given that he's a fictional character created by Arthur Conan Doyle, what Sherlock Holmes said is, when you eliminate the impossible, then what remains, no matter how improbable, is your answer. And so here's the improbable answer to why you could get these sort of disconnects, I think, Aaron, that if you look at broad market sentiment, so what this is it's a supply-demand view of the stocks comprising the S&P 500, and it's 87% of market cap. Somewhere north of 80% of all volume is in the S&P 500 stocks. So here's what was happening. So as the year finished, there were massive bull bets made right at the conclusion of December, right into these options expirations that occur on the last trading day of the month. Well, that has the capacity to drive the market up. But look at the supply side. We looked at the supply side and said, holy cow, the market's 51% short. We looked at the demand side. This is demand, the green part of the graph. It's falling into options expirations. There's options expirations. And that is when stocks shot up, right there. And we would look at this and say, well, that's counterintuitive. That is highly improbable. It's highly improbable that you would have falling demand and rising supply, even with these big bull bets here, and see the market rise. So why did it? Well, that's the stocks. So this is the underlying asset. If you look at SPY, which is the derivative, it's almost the opposite.
Wow.
And so it leads us to conclude that the tail wagged the dog. If you look at SPY will spend most of its time at 5 because it is the market, right? SPY 5, a little uptick here, right at that same time that those bull bets were made in the underlying stocks. And look at the supply side. It's doing the opposite. It's trending. It got all the way down to, this is a very low level. SPY averages 55% short volume. over half of all the trading volume in SPY comes from borrowed or created stock. Market makers exempt from having to locate shares to short. So it only ticked up 2 days ago. So finally, and even here, it's at 46%, but we've gone from 38 to 46%, but there was the answer. We had steady demand in SPY, falling supply, and it drove the entire market up. But the context was January options expirations. That's why we tell people, look, you have to be very aware of the monthly resets, not the weeklies, not the 0 days to expirations, because that stuff doesn't have underlying asset movement. This is the stuff that people are using to hedge their exposure to the unknown. And it could be currency, interest rate, all kinds of different things that people are exposed to. And some part of that will be reflected in the equity market. So that is our answer. The tail of derivatives wag the dog of the underlying stocks. Can it continue? I don't know.
I mean, everyone talks about the stock market being a predictor of the economy and the time frame of it. Boy, oh boy, where are we at now? I mean, right now, the
Yeah.
market's telling us the economy's okay, and the economy's telling us the economy's okay here. It's just harmony just going to continue here, Tim?
Well, it's a great question, Joel.
I wonder where I got it from.
I will answer this in two ways. One, the first read, fourth quarter GDP came out 3.1%. The expectation was 2. That doesn't mean it's 1.3% better than expected. It means it was off by 67%. Right? If I were making predictions and I was wrong by 67, that's worse than a coin flip, right? That is how bad our capability to forecast GDP is. And I don't know why it's so bad. I can tell you why the numbers are so good. I mean, you can look at that data. I run that data. You can dump it from the Commerce Department. And so the thing that has increased the most dramatically versus the averages all the way back to 1947 is government spending. There was a big outlier in business investment in structures, which doesn't even make sense to me. But those are the things that have contributed. So in a sense, we're counting aid to Ukraine as US GDP. Did you know that? Well, it's included in the calculation.
Wow.
So you have to really think about what is in that calculation. Now, that's my one comment on the economy. Every day there is layoff news. So Salesforce laid off another 10%. Every day that's occurring. Where is it? Right. So I am skeptical when we are counting government spending as growth and telling everybody everything's awesome. Now, to the market, if 90% of the assets in the market were being driven by fundamental investment, bottom-up business fundamentals, classic Benjamin Graham style value investment, then I would say the market will always be a reflection of the economy. But 90% of the volume in the market is something other than fundamental investment. The largest single asset category in institutional investment is passive large cap blend. It's 50% of all assets. And what does that money want? It is not studying business performance. It's not checking to see if Intel is going to, lower or raise expectations. That's actually the wrong thing for Intel to do. If you want to file an 8K and say, well, we're going to change it, you shouldn't even give guidance, because that isn't what money's buying. Money buys a product. Great analogy for you. I'm back in Steamboat. We came down Wednesday, went down to Denver, and we went by a herd of elk. Beautiful herd. And that is how BlackRock looks at the stock market. BlackRock wants a herd of large cap, liquid, low volatility, value and growth products. And you can see that in 13F filings for public companies. The top 25 holders of nearly all of the S&P 500 now don't even include a stock picker anymore. It's all passive money. That passive money wants equities as a product, a herd of elk. And all the public companies are out here telling everybody it's earnings season, why they're the outlier who has ran away from the herd. That endangers you. It doesn't help you. So summarizing, you can't expect the market necessarily to reflect the economy, because that's not what the money is buying. Money is buying equities as a product. Now we'll see how it all turns out, Joel.
So much information there, Tim, just to digest here. Let's try to just sum up, though. Like, I mean, this market, again, has been driven by tech. This market has been driven by a few names, but other names starting to catch up, starting to perk up here. Does this continue? Like, are we just in this tech market forever? Because it feels like it's not been like a year. It's not been like a few months. It feels like it's been like 10 years of nonstop tech. Is this just, what ETF money managers want? Is this just what, is this the market that we're in? If you got tech and then you got everything else, does it just stay this way?
I don't know how it changes, Dennis. I'll give you a great case in point from trading. So believe it or not, I actually twice in the past week traded SQQQ, made 1.5%, which is short. It's a 3 times leveraged short ETF on big tech on the NASDAQ 100. So and why would I do that? Well, my probabilities are very high. I want a 90% probability. I don't want to be 67% wrong like the Fed. I want to be as right as I can be. And the reason I did that is this. If we look not at airlines and cruise ships, let's go to big tech. So here's how I look at big tech. When big tech has a big supply deficiency and rising demand, I'm going to be long big tech, long levered big tech. Why? Because you can make money. When we get to options expirations and supply flattens out, and it even ticked up a little bit here, then I might short it briefly. I really need bigger deterioration than that. But here's the thing that I wanted to say to answer your question, Dennis. SQQ routinely has 500,000 shares at the bid or the offer. It's a very, very liquid stock. So I can buy thousands of shares at a time. But even so, if I hit the button to buy 5,000 shares of it at the market, my trade splits into 15 pieces. One of those trades in that instrument, 10 shares at direct edge. Okay, so translate that issue to BlackRock, Vanguard, Fidelity, State Street, UBS, JP Morgan, Morgan Stanley, trying to move billions of dollars at a time. It's very, very difficult. So you are forced into things like big tech, which trade $100 billion a day. So we are, as Mark Rowan from Apollo said, we are all levered to 5 growth stocks in the Fed. We're overexposed to them, and I don't know how that changes. I don't. I think we're stuck with it for the time being.
I think it's a great point. I mean, it's liquidity, and this is why the small caps continue to lag. It's like, I see it. I come out here, I go into some small cap name, and it costs, like, the spreads are wide. They talk about how tight the spreads are. They talk about, how easy it is to get in and out. This is what everybody wants you to believe. But when you get outside the S&P 500, it is very difficult to put on anything of substantial size. And that's why the money managers completely ignore all the small stuff, because they can't pay 5, 10, 15% to get in and out of stocks. All their alpha's gone.
Exactly.
So that's exactly. So it's almost a market structure issue. Why we're stuck with just trading, and obviously, just focusing on all the big guns, and the small caps maybe just continue to lag forever, maybe because of market structure.
I agree. I've got a small cap portfolio here, and all I do is look at the 30-day supply-demand relationship. That's what I'm going to do. Keep in mind, traders and investors, small caps, the Russell 2000, see there are about 2,000 stocks in that portfolio. It's 5% of assets under management. It's 5% of market cap. 5%. It's been cut in half since Reg MS, Dennis, since 2000. From 2007 to present, the part of the market comprised of small caps has collapsed.
What is the percent? One more time. Say it one more time.
5%. 95% of assets are in the Russell 1000. That's where all the money is. Yeah. So, as Willie Sutton said about robbing banks, why do you rob banks, Willie? Well, because it's where the money is, right? So this is the same idea. This is going to be if you have generally weaker demand and rising supply, it's going to be very difficult to make money in small caps, and you can't get in and out of them, right? So you have to go where the money is. And traders, it's important to understand it. It dovetails, Joel, with your point about the economy. We used to think that small caps are the growth part of the economy and they should reflect those fundamentals. No, they reflect the absence of money. That's why small caps can't perform like the rest of the market anymore. I'm sorry, but that's the way it is. And if you look at the average small cap IPO, it's down 50% from 5 years ago. If you went public 5 years ago and you had less than 5 billion in market cap, your stock's down by half, right? Because it's not a market that supports small caps. To me, that's a disservice that the exchanges are doing to public companies. But
Tim, before you
Yeah.
hit those double black diamonds out there,
Yeah.
do you have or the bunny hill? Do
The
you
bunny hill.
Bunny hill.
Magic carpet for me, Joel.
Yeah.
I hit the bunny
Yeah.
hills.
Do you have it? Do you have any trade setups here that you're looking at for today or for early next week here as the market is approaching all-time highs?
Right. Well, I am very careful when demand in the broad market is below 5. It's very difficult to trade momentum when the market doesn't have it. So I'm going to watch. So then what do? I trade individual stocks. If there are a lot of companies, there are 9 in this momentum portfolio, I look for these supply demand divergences. But knowing that the broad market doesn't support that, you can get caught out. So I wouldn't even give you a name. Here's what I do. I'm going to look at this and trade it directionally for an hour. That's what I'll do. If I look at this data, I still think that the market has not had the effect that this should deliver. And sometimes that delay is the effect is delayed. So if I were to tell anybody, and again, you should not do this unless you understand the mechanics of the market, how things work in the stock market. But I will trade directionally on instruments like the Qs and the S&P 500, but for very short increments because I don't know which direction it's going to go. When you have this really strong demand, falling supply, I can tell you we're going to trade momentum all day long. We'll just go to the momentum portfolio, trade those things, take 2% every day, and it's a great trade. But that trade is not back yet to me.
All right. Well, Tim Quast, again, from Market Structure Edge. I'll drop that chat in the link if folks want to go check it out. And Tim, stay safe out there on the slopes. I'm going to be out there myself in a few weeks. I'll be in Breckenridge, so I'll have to hit you up and see if you're still in Steamboat when you're out there. Maybe we can meet up for what do they call it? After après ski.
That's
ski.
my favorite part of skiing is après ski.
Yeah,
that's
there we go.
Is that like a fancy word or something?
It's like a fancy word for saying a drink after you ski.
Exactly.
Oh, yeah. Is that French?
French, yeah.
You're probably a snowboarder, right?
No, I wish. I'm not that cool. I learned how to ski though. My mom taught me when I was younger. I get to get out maybe once a year. Love it. So, Tim, again, I'll hit you up when I'm out there. Thanks for hopping on this morning.
Sounds good, AB. I'll look forward to it. You guys take care. Happy Friday.
I got a good ski story, but I'll save that for another time. Well, I bite my tongue here when I said the high of the day is in.
Dennis
here.
told you. Dennis told you not to say it.
No, the dips just get bought, folks. The story remains the same. If you're sitting here trying to short stocks, you just keep getting beat up. If you're sitting here just blindly buying the dip every time we dip, not on every stock, but on tech stocks, on the indices, you're being rewarded. And it happened here again. I mean, I have no idea why they were really selling off on this number because the number, like you said, AB, was good.
Yeah.
So they hit us off the bat, people nervous. So like, oh, I don't know. I don't know why they were hitting us, but money managers come in and say, what the hell? I'll buy this number. And that's what they did. And as more money managers get to their desk, and one thing to consider, I've said this before, these numbers come out at 8:30. A lot of money managers are not at the desk yet. They're, just getting in, they're getting into their office, they're getting settled down. They come in, they start looking, they're like, why is the market trading down on this? So then they come in, and the big money starts coming in. And that's what's happened here. The big money has come in and said, look, it doesn't make any sense to be trading down on this. Let's buy this back up. I mean, we do have some, tough information from Intel today. It is a bit of a chip wreck out there still, but everything else is rallying. You asked me this morning what was showing strength. It's now everything except the chips here, Joel. So, I mean, across the board strength, airlines flying, banks have caught a bid. We've got, IWM is just blasting off here too. So you're seeing a lot of strength across the board.
Q4 earnings season going pretty good so far, right? I mean, you've had some disappointments, you've had some nice beats, and market moving up uninterrupted here. We did have 240 companies report this week, but we got some big guns next week, Dennis.
If you thought we've seen anything yet, just wait till next Tuesday. Because next Tuesday, after the close, you have a little small $3 trillion company named Microsoft ready to report, as well as Google, as well as AMD. So you have three of really the biggest tech companies out there right now getting ready to report in the single day. Not to mention, we will hear from Apple later in the week on Thursday with Meta and Amazon. So again, Tuesday and Thursday will be your big, huge tech day earnings. And I don't know. It's like kind of like I'm feeling the same way. I guess there was a quarter. I think it was the last quarter of 2021 when the market was at all-time highs, and all the big tech companies, every single one, Apple, Microsoft, Amazon, whatever, beat earnings estimates, reported the best quarters ever. And the stocks sold off because that was already the expectation that was already baked in. And it's kind of feeling, I'm not saying that's what's going to happen, but it almost feels like a similar setup going into it already. We're at exactly. The bar is just very high right now.
Well, and that's for everything. I mean, you think about high bars, SMCI and AMD both reporting next week as well. Both of those stocks have just been on unbelievable runs. People want to call the tops on these, have been calling the tops. And maybe today, with Intel, maybe it's a little cooling period. But you know what? Stocks don't go straight up. And we have been straight up from these two stocks here pretty much all year. So I know
let me ask you about, so for the Intel, which do you think it's more likely that Intel's earnings give us insight into overall slowing demand for the chips, or from everything else we've seen from the chip companies that maybe there's just slowing demand for Intel's chips?
Yeah, I think so. I think this is more of an Intel problem and not, a demand problem in the industry here. I think AI is going to continue to drive the bus, not just for this year, but going forward. I do believe we're in the early innings of AI. I believe we're in like 1996 with the internet. We are very, very early here. So I try to think about building a long-term portfolio and what do I think is going to be a driver? I totally believe it's going to be AI. This is what's going to drive the economy for the next 20 years is AI. It's going to be game changing. Humanoids, I like that aspect of it too. Chris Camillo talks about it over on Dumb Money. He's all in on Tesla because of the humanoids. I think there's a place there for this. I think it's just too far out right now. So I don't want to be early on this trade. That's why Tesla would be on my shopping list at a certain price, but you don't want to be early there. And remember, it's not just Tesla working on humanoids, lots of others. The stuff they're doing over at Boston Dynamics is nothing short of incredible. I mean, the humanoids are coming. The AI is coming. You're not going to stop it. So you think about, is there going to be, NVIDIA, less demand here 5 years from now than there is today? Probably not. So, I mean, we can, you look at NVIDIA trading 28 times, or I guess it's come up a bit. So it's like
it's a big argument
now. 33 or 34 times forward earnings. So these people are saying it's trading 1,000 times earnings. Like I saw somebody tweet out yesterday, AMD is trading 1,400 times earnings. These are lies, folks. They're using trailing earnings to try to say how much of a bubble we're in. You can't look at the trailing earnings where AMD, it made 1 cent last quarter. Let's extrapolate that over the next 4 quarters and come up with a number here to say that AMD is trading 1,400 times earnings. So, I mean, it's how you take that information. What I've said is don't look at trailing earnings. Look at forward earnings. People say, well, you can't predict the future.
You're looking at the past.
You know what? They do predict the future. These analysts are damn good at predicting the future. These earnings are very, so you've got to look at what the forward earnings are. AMD is trading over 50 times, so it's stretched. We were buying it literally 6 months ago at half this valuation. I thought at 28 times earnings, I liked AMD. 28 times forward earnings. At 54 now, it's like, am I coming in here or do I need a pullback? I think if you're coming in here now, I'm up 90% on this position in 2 months. I mean, it's a big move. Do I think AMD is going to be higher 5 years from now? Yes. Do I think we need a dip to enter at this point in time? Yeah, I don't think I would chase it here at this point in time. But I do think AI is going to be a big part. And I think if you're just sitting on the sidelines and saying, this is all bubbles, NVIDIA, AMD, all these stocks are bubbles. I'm buying my, airline stocks. I'm buying my traditional car companies because these things have value. I think you're going to look like this next 10 years is going to look like the previous 10 years. You're going to lag in your portfolio.
Yeah, and the other thing that I always like to think about with the PEs is if you're someone who's out there and say you like value stocks, sure, that's all good and great. But if you're looking for companies that are going to grow over time, I mean, a higher PE is showing you that a market's pricing in that growth. And if you avoided any stock with over a certain PE and you said, "Ooh,
didn't
no, that
miss it.
PE's," you would have missed Amazon, you would have missed
All of
Apple,
them.
you would have missed Nvidia, all these stocks. So you just gotta pick. There's no one metric that's gonna show you everything, so you got to take it on a case by case basis. Something like Nvidia that might have a higher than average PE, sure, there's justification for that. There's a reason for that, and frankly, I'm fine buying Nvidia at a higher PE. Now, some other stocks, maybe not. Maybe I wouldn't want to buy it at such a high PE. But I mean, again, if the growth is there, then hey. All right.
AB, I just want to expand on that point. It's such a great point you're making here and using Amazon as the example. All we heard, Joel, in 2008, in 2009, in 2010, when Amazon was marching and trading 100 times earnings, all we heard was this multiple is nuts and this is not justified. That was when Amazon was like $5 on a split adjusted basis here, like $10 on a split adjusted basis. And all of a sudden you look here now and Amazon's only trading. What's Amazon's multiple? Go to the pro here. 50 times maybe? Is it
pull up
what is it? 50? Is it 50?
We're looking at the
I'm bringing it up
PE?
here right now. Yeah, and again, I like looking at the forward, not the trailing.
I'm in my wrong.
So forward 43. So we're 43 times forward earnings. I mean, the stock has went up thousands of percent, and we're only 43 times now. So that earnings multiple has actually contracted, yet the stock has went up thousands of percent. That's the power of earnings growth, folks. That's why you just cannot take trailing earnings, looking at face value. You've got to be looking at those projections out. Could Nvidia be the Amazon in the next 10 years? It's quite possible. I don't know if it's Nvidia. I don't know if it's AMD. I don't know if it's another chip stock. The one thing in chips, there's a lot of competition. There's competition coming. I think AMD and Nvidia are going to be the two big players. There's other competition coming here too. So, I mean, I'm not as all in on one stock here, but I think you have to just take the blinders off and say, we have a change of everything here happening. We're going with this AI theme, and pure plays like AMD and Nvidia are being rewarded.
Well, in Amazon too, during when they were bringing that money in, they were just putting it into research and putting
spending
it
a lot
back
of money,
into the company.
They could have had that number. Michael Pachter was on our show multiple times over the last 10 years talking about Amazon could make more money if they wanted to make more money, but they're investing it back into the company.
AWS.
But the people out there don't want that narrative. They want to talk about bubbles. They want to talk about everything blowing up. That's what sells. That's headline-driven, media. So, I mean, that's what the cool story is. Oh, Amazon's trading, AMD's trading 1,400 times earnings. You're never going to make your money back. AMD is not trading 1,400 times earnings, folks. It is not. It is they're taking it from the last quarter where they probably made a penny and trying to extrapolate that out. Go to your forward multiples. It's trading 48 times right now. 48 times forward earnings. It's run. I can grant you, when we bought it was 28 times forward earnings. It's now 48 times. It's run. But it's not trading 1,400 times earnings.
I really don't get, Dennis, to your point, to these people that want to make everything seem worse than they are. Oh, everything's a bubble. Look at AMD's 1,400 PE. Like, I'm not saying it's short. I'm not saying it's from Zero Hedge, but those people, do they not get sick of it over time? Like rooting against companies, rooting against the economy, and being wrong time after time again.
Very wrong.
Like how do they not get sick? Like Zero Hedge, I'm assuming that whoever runs that account's short. Like, do you not get sick?
They're not. They're just selling headlines.
Maybe not Zero Hedge. But
I think most of these people, AB, who are actually yelling out the scenarios out there are just trying to drive traffic to their own media sources. I do not believe that they are actually short.
No, maybe not Zero Hedge himself, but
I think they're just making Zero Hedge is fun. Zero Hedge puts out a lot of stuff. It's the conspiracy theory. I love Zero Hedge reading it. It's a lot of fun to read.
It's fun. I'm talking about more the people that
Zero Hedge.
I'm talking about more the people that like retweet it to say, "See, look, I told you the economy is, I'm just saying that wouldn't over time eventually. I feel like the longer you're in the market, the closer you get to being a perma bull because you realize, oh yeah, if this number's bad, so what? They're just going to say this and that, and then the market's going to go back up. Like I just over time, it seems
You know
like
who
it'd be
most of these people who are tweeting out? It's that they're not long.
right.
It's that they're
They
missing
missed out. They missed out
and
on
they're
the party.
pissed off that they're
FOMO.
watched NVIDIA go from 200 to 600, and they're pissed off about it, and they're going to keep saying, well, you know what? It's going to come back down, and you're going to be wrong, and you're going to lose all your money. And, they're going to continue to say that. And you know what? There'll be a dip one day, and I will hear it on my Twitter. I'll have 50 people reaching out. See, I told you your rocket ship NASA is crashing and burning, Dennis. You suck. And that'll be, if it goes from 600 to 550. But they won't tell you, well, I bought NVIDIA 405. So I'm like, I'm still doing okay here, folks. But that's what they want. People are jealous. They're naturally jealous. People are, and if they're not in these stocks, they're pissed off that they're not in them, and they're jealous about it. Now, again, I'm not saying bubbles don't exist. Bubbles exist. Is there an AI bubble here? Maybe a short-term one. But I'm saying this bubble in AI is way more justified than a lot of other bubbles that we see.
I just have to say that's a whole new perspective here being in the office, and I got Dennis up there on the big screen, and
It's fun. Yeah, we gotta do this more.
It's a new perspective here on the Triple D rants here. So always good information. What we're trying to do here is give you the information that's out there, the things that we've seen in the markets over the past combined. You don't want to know how many years that is, and then someone like Aaron, that's what we're trying to do, Dennis. A lot of passion here. We love that. We're gonna wrap things up. We went all the way to 9:08 here. Wrapping things up. You do have a couple highs in the market. The high on Wednesday, 33.25. That's our bogey, 23.25. You know how I like my closing prices. That's the old-time closing high price. We'll see if we can improve on that today. Also, the propensity of the market to close on the highs or lows for the week. How many times have we seen that? We're pretty darn close.
We're leaking again on the spies here. Should we try again? Should we try to say the highs are in?
Yeah.
Oh, the highs are in for the day. We're going to chop around. We've come a long ways, folks. Let's give perspective. I don't feel like you need to chase here. I'm not saying we got to go all in and chase here. I'm just saying if you get a dip, maybe you should think about buying.
You see the Oilers, by the way, 15 in a row. All right, guys.
15
I know.
in a row.
15 in a
I
row,
don't know even how to handle this. The Lions are winning. The Oilers are winning. I've only ever cheered for losing teams, so I'm not even sure what to do. It doesn't I don't know how to
things
handle
are going
it. I don't
too
know how
well.
to handle winning.
Things are going too well.
What do you think
Two
about
things
the
going
Lions?
too well. I'm just waiting for everything to just fall
The
off the
Lions,
cliff.
we're not going to talk before the
The
game.
Lions win this weekend. Can they win? Can they beat? Can they
yeah.
win?
So here's my thing for the weekend. I'm not going to be able to talk to anyone in the chat before the game on Friday or Sunday. Brock Purdy threw about 5 balls that should have been intercepted against the Packers. I think if the Lions get 2 turnovers, so 2 interceptions,
it's going to be tough.
I don't know. I think if they get 1 interception, a fumble, maybe that's going to be the key. The Lions will need to turn the ball over once or twice, and that could flip the game. But that's AB's key to the game.
What about the DraftKings over under? We got to make a prediction on this.
I'll take the over. It's always more fun.
No, wait a second.
Oh, okay.
You didn't even hear what the stat is.
I'll take the over. I'll take the over.
The over under on how many times we're going to see Raz on TV.
Oh gosh.
2.5
for sure.
2.5.
2.5.
Yeah.
I'll take.
He's so excited jumping over. I hope he don't fall over the railing or something.
Yeah, I don't know. I don't know if his seats are going to be that close there at,
Maybe not at
the stadium. But
no, he still got on the away game in Tampa. He was on the TV.
I know.
So
I know.
And on TV on the so
he
just because it's not in Detroit, don't think that Raz won't
don't
find
short
his,
it.
Yeah, don't
finds a
short
way.
it. I'm not going to short it. All right, guys, 9:10. Market opens in 20 minutes. Make sure everyone have a great weekend. Stay safe and stay
Get over
green.
there to live trading.
Yep. And yeah, the live trading will start right now. Redirect. You do not need to go anywhere. Make sure to hang out with Ryan, Zunaid, the crew. We'll be over there.